Welcome back, YouTube family. I hope you had a great start to your trading year so far. I know it has been a while, but I promise y'all I'll be working hard in the back. I'll be studying this smart money course for the last couple of months, and I just finished it, so I will be bringing it to this channel as well. Also, I will be introducing the new weekly recap concept to this channel, so you can be on the lookout every end of the week. I will post my wins, my loss of all the trades that I took from the previous week. So let's break down this 1.3 risk to reward Euro Australian dollar that brought me a profit of $706. So as you know, we always start off on the daily time frame, but this time I will just start over because that's been a while, give you the basics of market structure, etc., what we are going to be looking for. So as you know, the market moves in waves. In this case, it is a bullish market structure, so we'll be looking for price to make higher highs, higher lows, higher high, breaking this previous structure, creating a new high, followed by a correction. That correction will create a new impulse, breaking the next high, forming a higher low. So we will be looking to get in on these higher lows. Every time price had an impulse, it must correct itself, get some rest to form a new impulse breaking structure to continue the trend. So as you know, we start off on the daily and we look for a impulse breaking previous structure, closing above the highest point of that structure with the body closing above the highest structure point. In this case, we will use the wicks. So as you see right here, we have this big green candle breaking previous structure and closing above the previous structure high. The correction should be at least 2 daily candles of the same color. So right here, we see these 2 retracements and they are all the same color, red candles. And you can see the retracement is slower than the impulse. So we have this big green candle right here, breaking and closing above previous structure, followed by a retracement that is slower and smaller than the impulse itself. And the retracement also has 2 daily candles of the same color. So this is a good setup. Now we will be looking for any resistance or support that could be of influence on the weekly time frame. So right here, I can already identify an area of structure, in this case, an area of support. So as you can see right here, price came down and found support at this level. It went back up, had a retracement, found support again at this level, went back up, and then it broke this support level, now becoming resistance. So we see it broke under, had a retest. This structure level is now resistance. Price went back down, and then it broke it again back to the upside. So now the previous resistance level was broken to the upside and now became support. Off this support level, we can see this big green engulfing candle engulfing all these retracement and bullish candles. So this is an indication that price may want to go higher because we had price pullback to the support level, followed by this big green engulfing bullish candle, engulfing all these candles right here. So there may be a possibility that price will want to continue to the upside. But what we can see right here is that price failed to close above this resistance level on the weekly time frame. So normally we would like price to close on the weekly time frame above this resistance level, but it didn't close. In this case, it doesn't really matter because you will see on the daily that the structure is very nice and we are still going to take the trade, even though on the weekly it didn't close above this resistance level. So after we identify our areas on the weekly time frame that could be of influence, we go back down to the daily time frame. On the daily time frame, you can see right here that price used this weekly resistance level as a structural level on the daily also, which this big engulfing candle broke above, followed by a retracement, and the retracement is using this level right here as support, to find support and go create a new impulse. So after we identify our areas on the weekly time frame, we go back to the daily, and on the daily, we will draw our Fibonacci. The Fibonacci is to be drawn in the opposite direction of the correction. This is because we are going to measure the distance of the new impulse that is to be formed. So you draw it from the end of the correction to the beginning of the correction, and this is because we are going to measure the distance of the impulse that will be created. So then we go down to the 4 hour. On the 4 hour, we will be looking for price to break the 61 level. As you can see right here, let me just put it closer so it's more clear. We will be waiting for price to break this 61 level. Then we will put our buy limit on the 61 level so it can come and retrace and then tap us in, and then we can ride it all the way to the TP. That will always be the negative 27, and our stop loss is going to be at the 88 level. So right now, let's put our buy limit order. So first, we're going to wait until it breaks and close above the 61. Right here, you see it clearly broke and closed above the 61 level. So then we put our buy limit order on the 61, our stop loss on the 88, and our TP is going to be the negative 27. So right now, we're just going to wait until price taps us in. As you can see right here, price has clearly tapped us in, and we are now in the trade. So let's play it forward. You see, price now has clearly broken and closed above this 38 level. So this is an indication that we can now move our stop loss to break even, and it becomes a risk-free trade, and we can just sit back and ride the trade all the way to the TP level. So right now, this stop loss is going to break even, and it will become a risk-free trade. And as you can see right here, the TP has just clearly been smashed. That is the 1 to 3 risk to reward on Euro Australian dollar. Thank you all for watching. Hope y'all appreciated this breakdown. There will be more uploads coming soon, more frequent as well. Appreciate y'all, and I see y'all in the next video. Peace.